Okay, good morning, everybody. My name is Alexander. Today is the 25th of March 2021, and this is my catch up series. So I'll go over this fast and it won't take as much time. So, a recap of last week. Um, Gold was around here. Last week was last week's dates. Give me a second. Last week's date was 18th. So gold was around here that time, and we can see that it moved up and has been stuck in a consolidation since then. AU was around this level where I said I expected a retracement before continuation to the upside. We didn't see that continuation to the upside, but what we did see was the market opening with a gap and breaking that level here and breaking that level with this series of bearish candle 1, 2, 3, 4, and you can see that I capitalized on this sell um after I saw that break. So what is expected on AUD USD is this flat fibs. The other Fibonacci here got 100% retracement and is currently almost at the minus 27. So you can draw the Fibonacci whatever way you want. You might draw it from here to here, expecting the market to give a retracement to back to this level before it continues down. Or in the meantime, you might just want to draw it from here, from this lower high back down here, and you still get the same area where the market is potentially coming back to. So potentially we might see this market come back to this level before dropping back down, or we might just see the market continue the correction based off of this 1, 2, 3 candles. You see this bearish, healthy bearish candle, one bullish candle, making this level holding. So this level is holding. That's why we could draw a Fibonacci from top to bottom. So we might see the market reject up, or we might just see the market break this level and continue back down. But we should still have our sights on this weekly level here. So we just want to see what the market is doing. CHF JPY, the market was somewhere around here. The market was somewhere around here on Thursday last week, where I said we might just see the market continue the bullish move, but I said I'll be a seller if I see a break of this level, and you can see a break, retest, and boom. And I said the market might come to this 61% level and reject. And when the market opened with a gap, I took a buy off of this level back top. And if you draw the Fibonacci from here to here, you see that it's not a PRZ level, so it has to be adjusted back down to this level. And you can see a 78%, which is a discount level retracement, some type of bearish engulfing. If you go on lower time frame, you'd understand how to capitalize on this trade. And off we went. I didn't capitalize on the trade until I saw um, good bearish momentum, and on lower time frame I capitalized on it, and you can see where we went from there. So like this, looks like this structure is broken, and CHF JPY is really stuck in a consolidation based off of this high that has been holding for a for a couple of years now, so that level might be holding, but based off of structure, let's see. You can draw your Fibonacci of this level down to this level and expect some type of retracement to at least 61.8 before it drops, or higher, or even as high as this. But looking at this level is still holding, and as such you can still take a buy position. You can still take a buy position if there is some type of retracement back to all these levels. Since this level has broken 1, 2, you can go on lower time frame, reanalyze. You might see a retest of this level for a push to the upside. Then you can counter trend trade if you see a setup, or the market is at 23%. If we see some type of bearish engulfing, signifying that the bearish momentum is back into the market, we can continue selling to the downside. EUR/JPY, the market was around here last week where I said since this level is holding, we might just see the market push back down before going back up or continue its rally. From that time on, we can see that the market pushed down with the gap. The market opened lower and potentially around this level, and it pushed up, but I was a bear. You can see that from this level back down, and since this level is holding, give me a second. Since this level is holding, we might just see the market push back up also, which is like almost a replica of the CHF JPY, which is almost a replica of the CHF JPY. So let's see. The market might just come back up, back to this level, give us some type of reason to continue selling. Market might just give us another reason to sell. So let's see this. So the market is around the 23.6. We might see it give a bearish engulfing for a continuation to the downside or a continuation to the upside. Let's just see how that works. You know how to capitalize on your trade when you go on lower time frame and understand the buyers of the market that we are currently, and trade accordingly. EUR/USD was around here last week. I said we might see it go up to the upside, but this level has been holding. We see that push back down, that break. I did not capitalize on this. Added confirmation would be a break of the trend line, a retest, some type of bearish engulfing or bearish variation back to the downside, and that is what we see. GBP/JPY, I was hands off until I saw that bearish momentum, which gave the bearish break, the break of this level. You could see a retest of that level, and from Damola's catch up on Monday, he said that we are in a bearish market right now. So different analysis, but same type of buyers based off of market structure and momentum, and you can see how that played out. So what are we expecting next? We're expecting this market is still some type of overall bullish, But based off of this Fibonacci, this structure has been broken, and this level looks like the level the market might want to run into. But since there is an order block here that the market is rejecting off of, bearish doji, bullish, bearish bullish, so it means this level is holding. So we might just see the market reject from this level. If we pull out our fib like that from top to bottom, might see the market come back to this level, or if the momentum is strong enough, like this market, we are still bearish. The momentum is still bearish, regardless of whatever this zone is saying that it's holding. The momentum is still bearish based off these. If you go on lower time frame, you'd see it looks like a pennant or wedge or whatever market pattern they call it. So we have A, B, C, D. We might see the market break this to the upside, or we might just see A, B, C, D, E break to the downside, retest, and continue. But regardless of that, I don't do market patterns. All I do is market momentum and market structure. So regardless of whatever happens, a break of this level retest will signify a continuation. And GU also, we might just see it was stuck in a consolidation around. Yeah, it was bullish around here. This candle was a bullish candle where I said the break of this level, retest and continuation will signify the bull. But we didn't see that. All we saw is another retracement back to the downside. All right. So based off of structure, you could see how you could have capitalized on the selling opportunity there. You could see how you could have capitalized on the sell there. So let's see what the market wants to do next. We have seen a break. So what we expect is a retest of this level. So we might want to see a retest of this level, this Fibonacci. This Fibonacci looks like it's done now. Now a new Fibonacci is coming into play. So we'll pull out Fib from there to there. Looking at it, it has bearish momentum, so we might just see the market continue pushing downwards. But looks like this level is holding, and as such, you know what that means. It means we might see a rejection back to this level, which is in confluence with 38.2, rejection and continue falling. USD CHF had a descending channel, but you can see that the market fell and has broken that level. What we expect is a retest of that level. This level is still holding, by the way. Might see a retest to this level for a continuation to the upside. But we could see this was where the market was that day. We saw a rejection back to this level, and on Monday I was a seller. I sold. Then the market came back up, broke this structure, so now I expect a retest for a continuation. Gold has been stuck in a consolidation, so I'm going to hands off gold and take it out of my checklist. To the VIX part side of it, I said this level was a fresh zone, so we could expect a rejection from that level, or we could see a push back down to this level, back to this level. But I said this level was a fresh zone, which was the first time the market was coming back to that level, and this was the candle that morning. Um, so we saw a push back to the downside, which was around 100 pip, 200 pip. Then there was some type of break of this level where you could have capitalized on the bullish side of the market, having in perspective that this level is a fresh zone, so we could see the market come back up to this level, and that is what we have seen. See the market come back to this level, and regardless of whatever the market is doing, this level is still holding. You could see bullish, doji, bullish, bearish, and this level looks like it's holding. But with a double bottom, if you pull out a fib based off of this level, let's see, 38. Let's draw it correctly. We see the market come around this 38.23 region. So break of that level, a break of that level, and potentially we might have a bullish market like this, 38.2 bullish engulfing. We might see the market continue its rally to this level here, which is in confluence with almost the minus 61. So we might see that happen. So we might see this market run into this level, or we might just continue to see the rejection off of that level. So a confirmed bear would be a break of this level back to the downside. So that's that. So that's all for my catch-up series for this week. So let's see how it goes. Follow us on all social platforms, you know it, at Yusha Mindset, at Traders Hub NG, at King ALXNDA, everywhere, Twitter, IG. Subscribe to the YouTube channel, Traders Hub NG. So I'll see you guys next week. Take care. Bye bye.